In mid-September, the Federal Reserve did something it had not done in 4 years. It lowered interest rates by 50 basis points. Interest rates are important because they determine how much it costs to borrow money and how much you earn on savings. When rates are low, borrowing is cheaper, which can help people buy homes or start businesses. Conversely, higher rates mean higher costs for loans, but better returns on savings accounts. Overall, they influence economic growth, spending, and investment into society. The central banks often adjust interest rates to keep inflation in check and maintain economic stability. The Federal Reserve Chairman Jerome Powell emphasized that inflation today is much closer to its 2% target, and the labor market is less tight than pre-pandemic levels in 2019. JP Morgan Chase professionals believe that there will be 2 more rate cuts in 2024 and more on the horizon in 2025. Now, how will this impact your money in Fidelity? Uninvested cash in a brokerage account gets swept into Fidelity's money market funds called their core position. A core position is automatically started when you open a Fidelity account. There is no additional work on your end. Fidelity's money market funds are huge game changers. They protect you from the invisible hand snatching away at your pockets. No, I'm not talking about the government here, but that's a close second. I'm talking about inflation, because the US is constantly printing new dollar bills. This causes inflation to constantly make your money worth less and less. But with Fidelity's government money market funds, such as SPAXX, SPAXX, you can actually earn interest on your uninvested cash for doing absolutely nothing. Now, the word free money gets thrown around a lot these days, but this is probably the closest thing to free money that you will ever hear about in your life. You see, SPACs, they invest in short-term government securities, such as US Treasury bills and other government-backed debt. The fund invests in US Treasury bills and other government-backed securities which pay interest. This income is distributed to investors in the form of dividends. They will also invest in US repurchase agreements, which again are generally considered low risk because they are backed by high quality securities, usually US Treasuries. Again, you don't have to worry about these really defaulting because they are backed by the US government. The US government can always just simply print more money to repay their obligations. The US, for all the trouble that it's caused and had issues in the past 250 plus years, they have never, not once, ever defaulted on any of their obligations yet. All right, now the part you really care about. How much are you getting paid with these money market funds? Well, right now with SPACs, they have a 7-day yield of 4.58%, which is incredible. That is more than the current inflation rate and is essentially risk-free. Sure, it's probably not as good of a return as you can get, say, in the stock market with equities, but this is just money that you have sitting on the sidelines, ready to deploy. Maybe you have some money in an emergency savings account. This is a place to get a very good return with very low risk. This is way more money than Chase is giving you for all the money that you just have sitting in your checking account, not earning any interest. And that's constantly losing money to inflation every day. And also in the meantime, think about this. Chase is probably making so much money off of you with your cash that's on the other side. I mean, they got infinite money glitches to pay out. Your money in Fidelity might be in another popular money market fund such as FZFXX, the Fidelity Treasury Money Market Fund. This is essentially the same thing. It's just government-backed assets. This one is giving a 4.55% 7-day yield, which again is very good. Now that is at the time of this recording. Unfortunately, if the Fed continues to cut interest rates, that means the amount of passive income will go down with the interest rates. Prior to the interest rates being cut, Fidelity was giving nearly 5% on your uninvested cash, which is absolutely incredible. Now, Fidelity pays out interest on the last day of the month, so this provides 12 compounding opportunities, 12 opportunities to compound your money. Now, compounding is when your interest starts to earn interest and you become richer that much quicker. While Fidelity's money market funds may help build your wealth, it's nothing compared to how quickly Fidelity's ETFs can explode your net worth. Check out the videos that I did on them right here. If you like this content, please help out a small-time YouTuber by hitting that like button, making sure you subscribe for more stock market updates. See my full $200,000 plus portfolio on the Patreon link below, and check out my podcast on the Collect Cash podcast name, and I'll catch you on the next one.
You're going to get really tight pretty quickly, and that's what the military does for me.